Hey, this is Warren Redlick. We're going to talk in this video about whether Tesla should buy Uber or possibly Lyft. What value would that bring to Tesla? This was brought up by Gary Black. There was a conversation between Gary, Alexandra Merz, and Farzad on Twitter or X, whatever we're calling it, and I wanted to go through that. I'm wearing the Critical Thinking t-shirt. Discriminate cogitandi is Latin for critical thinking. You can buy that at elonbits.com. So I'm going to apply some critical thinking to this question. Let's start here. Just a side note, along with Gary Black telling Elon how to do his business, here's Ross Gerber telling Elon how to do his business with X. This is one of those beautiful things about X or Twitter or the internet is anybody can come along and tell anybody they want, this is how you should run your business. I personally don't think this is a good way of going through life, but that's what Ross and Gary love to do. So here's Gary saying, not sure why Tesla just doesn't buy Uber to get into autonomous ride hailing and get all the data from its platform of 137 million customers who take 25 million trips per day. Okay, so we're going to address that. He tags Elon Musk and Martin Viecha. Alexandra Merz says we're both old enough to remember some Wall Street geniuses advising Apple to buy Sony because they had a Walkman, and it was BlackBerry. It's horrible advice. And Gary comes up with this, so you want Tesla to start its own ride-hailing network. I'm not sure that's what anybody said. And compete with Uber with 137 million customers and providing 25 million trips per day. That would be a truly horrible idea. Alexandra says, why would that be a horrible idea? Gary says, Uber is the entrenched leader in ride-hailing. They've made clear they will go autonomous when the tech is ready. What tech? Does Uber have some tech we don't know about? Does Uber have cameras and chips and hardware and software and an AI training supercomputer system getting a tech ready? Does Uber have some magic wand? He says Tesla can't just wave its magic wand and replace them. Where did Uber get the magic wand of autonomy? Tesla's the one with autonomy. Building ride-hailing from scratch would lose Tesla money for years. Look at Lyft. So we're going to dive into this. We're going to talk about Lyft, but this idea of building ride-hailing from scratch, I'm not sure how that's going to play out, but there's a problem that I think Gary doesn't see, and I don't know if anybody else sees it, so we're going to go through that. Farzad says ride-hailing is 100% software using an app. Tesla already is an app. They already build the cars, put the cars on the app, offer rides cheaper than Uber Lyft due to no driver. What am I missing? Gary says, you guys are naive. Teslas don't just drive themselves. Well, nobody's saying that Teslas drive themselves well enough for a robotaxi network yet. We are saying that Tesla's going to get there first. And Tesla's got a big lead, and Tesla's going to hold that lead for a while. And Uber is a well-established brand with 6 million drivers and a valued network to whom customers are very loyal. Oh, I'm not sure how loyal they are. Okay. I mean, I'm an Uber customer, and I'm also a Lyft customer. I have both apps on my phone. We could dive into that. Just putting out a Tesla ride-hailing app with a Tesla brand name on it won't get Tesla 25 million rides a day. So we're going to talk about all this. And the first thing I want to talk about is this idea that Tesla's going to all of a sudden have 25 million rides a day when they start up. That's not my expectation. My expectation is that Tesla will start up in a limited number of places. I'm guessing San Francisco, Arizona, maybe Austin. They're not going to immediately launch a ride-hailing app or a Tesla robotaxi network covering the entire world instantaneously. That is not Tesla's plan, I don't think. I think Tesla's plan is, let's identify places where we can test this out first, and let's demonstrate that it works, and then we can expand, and it's going to be jurisdiction by jurisdiction. So Texas and Florida will approve it fairly quickly. New York and Michigan will probably, and Massachusetts will probably be slow. Europe will be slow. China will be fast to adopt. So the idea that Tesla has to acquire all these customers all over the United States all at once is not realistic. And then you have this other problem that probably in the early days of the robotaxi network, there will be a limited supply of robotaxis. Tesla won't have enough of them out there on the road to satisfy all the demand. If they were to all of a sudden say, that's it, we're going to take out Uber, they're going to do it in a limited volume initially. Let's say they start in certain cities or certain areas, and then they acquire customers there, and they flood those markets with Teslas first, and then over time they expand to other markets. It's not like Tesla's going to start a ride-hailing service or a robotaxi service on day one and be at full volume. They're going to ramp just like they ramp everything else. So I think that's an unreasonable expectation on Gary's part. But I wanted to dive into this Uber thing, and I want to bring up Lyft as well. So Uber has a market cap of $94 billion. That's a big nut for Tesla to buy. Tesla has about 20 some billion dollars in cash. So this would have to be a cash plus stock transaction. Tesla's market cap is about $800 billion. So Tesla's got to take, I don't know, 10% of the market value of the company to buy Uber. I don't think this is a good strategy. Now, here's an alternative, and there's a question: is Lyft of comparable value to Uber in some way? Well, the thing is that Lyft is selling, its market cap is $4.4 billion. And by the way, if Tesla were to buy Uber, they'd have to pay a premium, right? So they wouldn't get it for $94 billion. They'd probably have to pay like $120 billion to get it. That would be a big nut. Now, you could buy Lyft, maybe $6 billion. So the cost to buy Uber versus the cost to buy Lyft is about 20x. So the question is the value within Uber 20x the value of Lyft? Now, Gary is talking about it from the value of the customer base, the data on that you bring these customers into your robotaxi network right away. And I don't think that's where the true value is. I don't think it's going to be difficult, like Farzad said, if Tesla opens up a ride-hailing network and undercuts Uber and Lyft on price, people are going to tell others. Like if I'm putting my vehicle in the robotaxi network and I'm going to be making money off it, I'm going to tell all my friends, hey, there's this cool new robotaxi network and you might get my car. This is awesome. People are going to rave about it. And when you learn the benefits, that it costs less and you don't have to tip the driver. And for some people, you don't have to worry about dealing with a driver who may be an uncomfortable interaction with a driver for some people. I've heard particularly from some female friends that they are uncomfortable riding in an Uber and Lyft sometimes because there's just some sort of dynamic with a male driver that they don't like. There's issues like that. But fundamentally, there's a roughly to 20 to 1 value difference between a price difference for Tesla to buy Uber versus Tesla buying Lyft. So I would argue if Tesla's going to buy one of them based on this, and we're going to do some more analysis, I would buy Lyft rather than buying Uber. Let's go a little deeper though. Here's Lyft's Q1 highlights. Q1 that both of them are about to release their Q2 2023 highlights, but here's the Q1 highlights. Lyft had revenue of $1 billion and lost about $200 million. Okay. Uber announced their results. Their revenue for the quarter was about $9 billion. So that's $8.8 billion. So they're about 9x in terms of revenue. So they're 20x in terms of market cap, but they're only 9x in terms of revenue. And they are, I think, becoming profitable. Net loss was $157 million. So net loss about the same. I think there's some sense that Uber is about to break even or might be cash flow positive or might be on the verge of making money, but they're not making a lot of money. Certainly better than losing money. But, just on a sense of scale of the company, Lyft is only 1/8 or 1/9 the size of Uber, and yet it's, 1/20th the market cap. So Lyft would seem to be a bigger bargain. Now, active riders, Lyft says they had 19.5 million active riders at the end of Q1 or as of Q1 of 2023, where Uber doesn't say riders, it says active consumers. Because remember, Uber has Uber Eats and some other platforms. So they have 130 million active consumers. 130 million versus 20. That's like a 6x. Maybe it's a 7x. So you're 6 or 7x in terms of customers, and you're 9x in terms of revenue, and you're maybe a little bit more profitable. Does that make you 20 times as valuable as Lyft? I would say no. And I would sort of ask, what's the real value here? I think the idea of getting access to these customers and bringing these customers in, well, what's the acquisition cost of those customers? How many of them are going to stay with your new platform? And I don't think Tesla's cost of acquiring riders is going to be that high once they open up the robotaxi network. If the price of the rides is significantly less than Uber and Lyft, I think they're going to pick up all those rides very quickly. I just don't think there's a value there in having access to that customer base. But I don't know if the value is that great. And then, Uber's customer base, like what percentage of that customer base is Uber Eats, which I'm not sure how much of that Tesla's going to use. Is Tesla planning on using robotaxis to deliver food in the same way that Uber Eats delivers food? I don't think that's really part of Tesla's plan. So there's some issues there as well. So next I want to talk about a type of value that Uber and Lyft have that I don't think anybody else is seeing. And this is where I think the real value might be, in particular in acquiring Lyft. I don't think the value I'm about to describe justifies paying over $100 billion for Uber, but it might justify paying for Lyft. So both of these companies generate a lot of data and they do a lot of data analysis. And it's not just like who are our customers, but there's a lot of other things that they get. So, for example, they have surge multipliers. When there's a lot of traffic, they figure out how much more do we need to charge. And they have models and they have data to figure out how much should we charge, when should we increase pricing. And this is something the robotaxi network is probably going to have to do. There's going to be peak times when there's more demand for the vehicles, and you're probably going to have to increase pricing, especially in certain locations, whatever. So having access to this kind of data and the data scientists that work for these companies could be value in figuring out what kind of pricing you're going to do. And here's another, this is a post from that the previous thing was from Uber itself. This is from outside Uber, somebody looking in saying big data and data science are at the heart of everything Uber does. Surge pricing, better cars, detecting fake rides, fake cards, fake ratings, estimating fares and driver ratings. There's a lot of things that Uber does with data that could turn out to be valuable in a robotaxi network. And having access to that data ahead of a time and having access to the people that work for the company that do this kind of analysis might be helpful for Tesla in figuring out how are we going to do this. And Lyft is similar. They have a whole machine learning. Lyft has a blog. Both companies have blogs where they talk about what they do. This is Lyft's blog talking about how they use machine learning in general. So you've got people doing machine learning and applying machine learning to their data. You've got how they focus their data on the marketplace, understanding how to assign drivers to riders across the city in the most time and cost efficient manner. This is monstrously huge for the robotaxi network. You want to figure out where you want to put your cars. If you've got people who've already put a lot of thought in this problem, they've already applied a lot of analysis to data that has been generated on this problem, this is incredibly valuable. Lyft has this data, Uber has this data. Now, Uber probably has more data, and they've probably spent more money developing their models, but I'm not sure that the value that you get by buying Uber over Lyft is going to be that much. Maybe it's worth 10% more. It's not worth 20x more. Determining which riders should be matched in a shared ride, leveraging prices and incentives to balance supply and demand, understanding the riders, measuring the quality of rider experiences, analyzing past behavior to understand riders' needs and preferences, designing memberships, optimizing rider acquisition. There's a lot of value data there. There's more data about the drivers. Now, data about the drivers isn't going to matter in a robotaxi network, but understanding the data about the cars that may apply to understanding the data about the cars themselves or the owners of the robotaxis. If they're, there's Tesla-owned robotaxis and there's private vehicles like mine that I might put in the robotaxi network, there may be value there. Rideshare planning and operations. Again, figuring out where are you going to send the cars, where are you going to charge the cars, where are you going to put the cars at night, where are you going to position the cars in the morning? How do you decide where to get your cars in different places? Where are the riders going to be? And mapping. I personally think Tesla's mapping is not that great. And if you're going to do a robotaxi, robotaxi network, you're going to want to have better mapping. And Lyft and Uber both have mapping data, and all this data has some value. And I would say, Uber's $120 billion, $94 billion plus a premium. I can't see that making sense for Tesla to buy. But if you could pick up Lyft for $6 billion, and you're going to develop a robotaxi network that's going to be generating $500 billion a year in gross profit, that's $6 billion is a hiccup. Tesla has the cash right now. They could buy Lyft. I'm not saying now's the time, by the way. I think that the value of Uber and Lyft drops once the robotaxi network goes live. Once Tesla demonstrates any kind of robotaxi network that's effective anywhere, if I'm a consumer, I'm looking at, I think rental car companies are in trouble, and I think ride-hailing companies are in trouble. Once we have evidence that we have a ride-hailing network, a robotaxi network coming that's going to be lower cost, and this is going to have ramifications in the rental car market and the ride-hailing market, and I think we're going to see the value of Uber and Lyft plummet. And so that may be the optimal time to pick up one of these companies, is when their value falls, when the market realizes, wait a minute, Tesla won the race to autonomy, and Tesla's robotaxi network is going to outcompete these guys, so they have no value. But I'm going to say, if you could pick up Lyft today for $6 billion, that's not crazy. I don't think there's a lot of prospect for Lyft's valuation going up that much. And if you waited a couple years and you bought Lyft for, let's say it goes up a little bit to 10 billion, but it may be that Lyft's value drops to 2 billion. It may be that Lyft ultimately goes into bankruptcy and you can pick it up for almost nothing. So I don't think there's an urgency, because we're not ready to launch a robotaxi network. We'll see when version 12 comes out of FSD. Does that cross the threshold where all of a sudden we start getting a lot more confidence about robotaxi? There's a lot of features that are going to be needed to add. We're going to need to add to the vehicles to make them robotaxi capable. Yeah, I don't know how long it's going to take to figure all that out, but I think there's going to be a moment in time where Tesla says, "Okay, we're about ready," and I think it might make sense to buy Lyft just simply because it's so cheap. Their market cap is only $4.5 billion. You pick them up for $6 billion, that's chump change to Tesla. So that one might make sense. But dropping, $120 billion, let's say, on Uber, I just can't make sense of that. I don't think the value of the customers that you would bring into your eventual robotaxi network is that high. I think you're going to generate those customers anyway. I think they have valuable data inside Uber. I just don't think it's worth this much money. And I'm shocked that the market values Uber this high when they don't make money or they make very little money and their growth, looking at the future, there's a question, how much are they going to grow? And, if you're looking at the future, you're saying robo-taxis are coming, why would you think Uber's going to win that competition? I don't see what Uber has that would have them win that competition. So I think Uber might, fail ultimately. But even if you're competing directly with Uber, if you buy Lyft and you have that data and then you're able to offer rides at a lower price, I think Tesla wins. So that's my take on it. Please let me know what you think in the comments below. Please check out the t-shirts, the Critical Thinking Discriminating Cogitandi t-shirt at elonbits.com. Please support me on the Locals platform, on Patreon, as a YouTube channel member, or as an X/Twitter subscriber. Like this video, share, and subscribe. Check out my other videos. And thank you all so much for watching.